Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, we'll start off with a question from our listener, Mike. Chris, do you see the traditional safe havens, most notably consumer staples, utilities, and real estate ETFs, as remaining as safe havens, or will they decline in a general equity market sell-off? Also, it seems like gold could be a good place, but what about gold mining stocks?
Yeah, I mean, that's there's a lot in there, but yeah, I mean, if we take a look at it kind of bite by bite, we look at utilities, typically, I mean, when we get into a bear market in equities in general, almost all equities go down. Utilities may outperform. They typically will fall the least amount, but if you were to put up utilities, even real estate, with the SP 500 during the last bear market, you can see they collapsed together. It's just utilities are the safer of the place, so and same with real estate. They're not going to drop as much on a percentage basis as the overall broad market. Looking over at gold miners outperforming, I think this time is setting up a little different than what we saw in '08. I think it'll be more like the 2000 kind of bear market we saw in equities, where we saw precious metals actually rally and take off and start a new major bull market. I think we're set up more like that this time. There's always a concern that if we get into a really bad equities bear market, that there'll be margin calls and everybody starts to panic and they just liquidate everything, or they're forced to liquidate, and that'll suck the gold miners down, a lot like what happened in 2008. It could happen again, but I feel as though they could hold up really well or actually outperform and take off, and we could see metals and miners start a new major bull market, something that could last a few years, and we could see huge percentage gains going forward. So I'm really bullish on metals and miners, but of course I use technical analysis and I follow it very closely. When a trend turns down, depending on the time frame I'm following, whether it's a weekly chart, a monthly long-term investing chart, or the daily chart for kind of swing trading, when those time frames are saying, hey, we're now in a bear market, we're making lower highs, lower lows, we've broken a significant support zone, as much as I love gold miners, you've got to get out because they're down, they're selling, and so that's the key. The key is to not hope and pray and that they're going to keep going up, but just to get out when something is showing that it's not going to outperform. You want to get out of it. So that's the way I look at things. You can guess all you want, but really it comes down to technical analysis that drives my decision, saying, okay, I don't, think this is going to rally, but the trend is up, it's breaking out, I got to get in. And, it's when you least expect a move to happen is when it's going to happen. So you got to follow the price.
Precious metals surging upwards. What's your analysis there?
Yeah, it feels like there's some helium in the air. I mean, we're seeing the metals really just pop, and the miners today, they're rocketing to the upside. You look at Palladium, it's up like 8% today, which is pretty crazy. So we're really seeing a lot of money really just pop into the safe haven plays today. We're seeing a strong move up. Resistance levels are getting breached. Gold is threatening to break above the high that we saw in early January. Another day or so, we could break above that. It'll be a really critical week for gold. Can we hold up at these levels, or can we break that 1612 on gold and hold there on Friday on the closing bell? Because we've seen this level has been reached almost twice before, and each time it got hammered and sold into in a big way. So The close this week will be really significant. If it's a strong close and we're up at these levels, I think we're going to see a lot more money pile into the precious metals sector. And when you look at the dollar today is up really big again. It just keeps rallying, and gold is moving up with it. And to me, the dollar looks like it's ready to pull back. And if the dollar pulls back, what's it going to do with precious metals? It could really fuel a breakout here on gold. So I'm really excited to see this price action, but a one-day pop, a one-day wonder, isn't a new trend. It's exciting. Everyone's getting worked up, but you got to see if there's more than just a one-day pop to back it up here.
How much manipulation is there in the gold market?
Everyone talks about it, and I think there's cases that has been proven, and I don't follow it because the markets always tend to, they have a way of moving, and I just follow the price action, and I don't get wrapped up in the manipulation. It's a great way to get angry every time you lose money. I hear it all the time from traders. Every time they lose money, they blame it on manipulation or JP Morgan and all this stuff. And to me, it's just pointless because you have no control over it. And it's been happening from the day the market's opened. So you just learn to trade the way the markets move, and that's kind of just the way I see things.
We'll have more with Chris Vermeulen right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, when gold becomes popular, like it has been the last few weeks, do you look at gold bullion, gold shares, ETFs, or miners? What's your position, or do you take a broad stake?
I like to look at them all. I like to see what everything is doing. So I like to look at the big picture, the chart of gold and silver, and the large cap gold stocks like GDX and the small cap gold stocks, which is GDXJ. And I will look at the silver miners, and the ETF for that is SIL. I like to just look at them all and make sure they're all making roughly the same patterns, and they're all agreeing with each other. Going forward, I think a very big explosive move is going to be in gold miners, silver miners. I mean, there's just more leverage to them, so they're going to move faster. There's different ways you can play it. Instead of playing a more volatile asset class like gold miners, where they'll be up, 3 or 4% one day, and the next day they're down 3 or 4%. You could potentially get into something that's more stable, like just gold, like GLD, or you can buy the 2 times or 3 times leverage bullion gold ETFs, and you can play those because gold seems to be more steady. It inches its way up. It consolidates with lower volatility. It doesn't pop and drop as much as gold miners. So you can still get roughly the same gains as gold miner juniors, but without the wild volatility. So to me, that is almost kind of, it's the conservative, it's an aggressive way, but it's a conservative angle on it versus going into the gold miners and then jacking up the leverage with some of the other ETFs like Nugget, which is a 3 times gold miners ETF. I've seen it rally 18% in a day, so it's pretty violent. You've got to trade smaller amounts of money, or you got to be a real gambler to want to poke around in those. But there's a lot of ways to play it. It depends on your risk appetite, how much you want to stomach on a day-to-day kind of swings in price.
We'll have more with Chris Vermeulen right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on with crude?
Well, crude oil, obviously it's been in a huge sell-off after the attack there. It's gone from almost $66 a barrel down to 40. I don't know what it dropped down to. There was about 49.25, somewhere in there. And now we've been in this sideways range for almost 2 weeks now. And if we break out of this sideways range to the upside, it's currently trading at 51.82. I think we're going to see it pop very quickly to $55. So we got about a $3 and change move to the upside that I think could happen within a couple days if it breaks above this resistance area, which is 52.25. If we break to the downside, which is where I'm kind of looking for prices to eventually resolve to, I think if we break below and close below 49.40, then we're going all the way down to about $44 a barrel. So I have a bearish kind of outlook on crude. Right now it's at support. It's trading in its range. But whichever way it breaks from this sideways range over the past 2 weeks, it's going to have a very quick pop and move. So we just got to be ready for which way that moves. And I think as a short-term trader, you could get in there, you could catch a couple percent, and get out, because it's only going to last probably 3 or 5 days. So very short-term type of trade. But crude is primed and ready for a quick trade here once it gives us a signal.
What's going on with Bitcoin right now?
Well, Bitcoin's been doing really well. Obviously, recently it had a quick pullback in the last session here, but overall it's starting a new uptrend. It has broken 2 previous pivot highs on the chart. One from back in November, another one from back in October. And usually after you've broken those 2 previous highs, the first pullback or pause can be bought. The big picture of Bitcoin is pointing to much higher prices. Using Fibonacci extensions on the chart, it will give us an upside of around 17,500 would be the next key upside move. Now, what I'd like to see with Bitcoin at this point is to consolidate, trade sideways or pull back a little bit, and then give us a strong reversal. At that point, I think you could jump in and you could ride it up to roughly the recent highs around 14,000. The next target will be that 17.5. So it is in an uptrend. It's a little overbought, but overall a pause or pullback here, and it will be primed and ready to really continue to go higher.
2 weeks ago, we were talking about natural gas. Is it something we should be talking about now?
It is. Natural gas, we've been following it. You and I have talked about it the last couple of shows. And, I traded it with subscribers back in, it was back in August. We had a huge pop and rally, another one in October. We caught some really nice moves there. And we've been waiting for natural gas to put a bottom in since really late November, and it just hasn't put a bottom in. It just keeps dropping and dropping, lower lows, lower highs. Finally, it looks like we got an exhaustion move last week. Today, natural gas up almost 8%. It has broken those 2 previous pivot highs, just like what I talked about in crude. Once you've broken 2 previous highs, that means there's enough momentum on that chart that it blew through 2 layers of resistance, and now the first pause or pullback should be bought, and we should see it start to go higher. So today is it's one of those, just like in gold, it's a big one-day move. We need to see a few more days that the market is going to hold this ground. It's going to consolidate sideways. And if it does, then we want to look to get in because this looks like a reversal, and we could be heading up to about $2.50 on natural gas. And right now it's trading at $1.97. So, we're looking at a 25% increase in natural gas here. That could happen very quickly if this is the start of a reversal.
Chris, how would you sum up what's happening in the markets right now then?
Well, the markets are giving some pretty mixed signals. The stock market, like the S&P 500, is still technically in an uptrend for swing traders. That being said, there is a lot of big money moving into all the defensive and the risk-off assets. We're seeing bonds perform really well. Utilities are performing well. Gold and miners are doing well. So when we see those sectors performing and holding their ground, even though stocks have been going higher, that is a sign that big money is positioning itself for some future weakness. So it has me a little concerned, but I am long gold miners, we're long bonds, and we're long equities with different mix of portfolio kind of percentages because technically they're all in an uptrend right now, and it's just a matter of balancing how much of a position you have in each. Today we trimmed some of SSO, which is a two-leveraged SP 500 long ETF. We trimmed some of that off. So, we're just kind of managing risk. We're constantly shuffling money from risk on to risk off and back and forth as the markets move. So right now, all the markets, gold, bonds, and metals are in an uptrend, and we're long all of them at this point. So, it's a good time to be in the markets, and hopefully these trends will continue, and we'll hit some profit targets where we can start trimming off and reducing our risk.
Chris, thank you so much for chatting with us.
Hey, thanks for having me, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.